Now go to Mr. Cummings.
Thank you, Mr. Chairman. Mr. Fuld, I really appreciate that you began your testimony by taking full responsibility for the company's downfall occurred on your watch. But there are some concerns that I want to get to. As you know, the American taxpayer, many of them, our constituents, we just passed legislation giving $700 billion to rescue Wall Street. One complaint I've heard over and over again from my constituents was that there seems to be a complete lack of accountability. They see Wall Street executives like you walking away with millions of dollars. And it's very interesting when you were talking about the chart that Mr. Waxman showed you on the board. You said that it was inaccurate. But I'm going to discount it for you. And instead of 448 million over 8 years, let's say 350. How about that? 350. Is that okay? Can we discount it a little bit? You said it was not accurate. What would you say is accurate?
I'd say that's closer, sir.
Okay. I want to ask you about one of the emails obtained by the committee on June 9th, 2008. A former top Lehman executive, can you hear me okay?
Yes, sir.
Benoit D'Angelin sent an email to Hugh McGee, who was the global head of investment banking at Lehman. The email says that many bankers have been calling in the last few days, and the mood has become truly awful. It warns that, and I quote, all the hard work we have put in could unravel very quickly, end of quote. And it offers the following advice. It says some senior managers have to be much less arrogant and internally admit that major mistakes have been made. We can't continue to say we are great and the market doesn't understand, end of quote. Mr. McGee forwarded this email to you on the same day and explained that it was representative of many others. When you read the email, and this is interesting, what was your reaction? I'm just curious.
I'm sorry, sir. What was the date of that? I'm sorry.
That would be June 9, 2008. You remember that email?
I do not.
Well, let me try to refresh your recollection a little bit. So let me tell you what you did, since you don't remember the email. Here's what happened. You didn't take any personal responsibility. Instead, 3 days later, Mr. Fuld, on June 12th, you fired Aaron Allen, your chief financial officer, and Joseph Gregory, your chief operating officer. But you stayed on and admitted no mistakes. You were CEO. Why didn't you take responsibility? Like today, you said you took full responsibility. Why didn't you take responsibility for Lehman's mistakes? Why did you continue to say, quote, we are great and the market doesn't understand? In your testimony today, right here, right now, you continue to deflect personal responsibility. You cite what you call a litany of reasons for Lehman's bankruptcy. Mr. Fuld, I want to ask you about your personal responsibility since you've taken it. Do you agree that Lehman took on excessive leverage under your leadership? Please answer yes or no.
It's not that easy. I will say to you, our leverage at times was higher, but as we entered this more difficult market over this last year, we continued to bring our leverage down so that even at the point, Congressman, on September 10th, when we announced our third quarter results, we had grossly reduced our balance sheet by close to $200 billion, specifically around residential mortgages and commercial real estate and leverage loans.
Mr. Fuld, I've got about less than a minute. I've got to get this question in. I assume your answer is no. I'm just giving you the benefit of the doubt.
At the end of the day, we work hard. Our leverage was way down.
All right, let me ask you my...
One of the best leverage ratios on the street, and our Tier 1 capital was one of the highest.
So you feel comfortable with that what you did, is that right? That's not one of the things that you said you're...
Yes, sir.
Okay, fine. Do you regret spending $10 billion in Lehman's cash reserves on bonuses, stock dividends, and stock buybacks as your firm faced liquidity crisis? Do you regret that now?
I heard some of that while I was in the other room. I think that is a misunderstanding, which I'd like to clear up.
Well, let me go back to, go ahead, you go ahead, I'm
Because
sorry.
it's important that this committee understands exactly what that was. When I talked about my employees owning close to 30%, what's typical of Wall Street is you take a percentage of your revenues and pay your people. We asked our employees take a big percentage of their compensation in stock. And so what that 10 billion was, we had close to 19 billion of revenues. What most of that 10 billion was compensation to our employees that they received in stock with a 5-year forward vest. So they didn't get that stock until 5 years, which aligned our interests, our being employees, with the interest of shareholders. To avoid dilution, because we took that 10 billion, gave it to the employees in stock, we had to take the 10 billion that they didn't get and go back into the open marketplace and buy back that stock so that we did not dilute our shareholders. And we each and every year, from where you sit, it looks like we just spent an extra 10 billion. That is not, sir, what we did.
Thank you very much, Mr. Chairman.
Sounds like, though, and I yield myself time here, that you were trying to not to dilute the payment to those employees while you were in a liquidity crisis. Wouldn't it have made more sense to use that money to pay off the debts that you were that were heavily on your shoulders at that point, and you knew that you were in a situation?
At that time, at the end of the year, last year, I didn't believe that we had that problem.
You didn't believe you had a liquidity problem.
And we did not have a liquidity problem at the end of last year. We had just completed a record year, none of which, by the way, came from mortgages. And we paid our people fairly in what we thought was competitive with the rest of the street.
Okay, I accept your answer. You didn't think you had a liquidity problem, so you were trying to make sure your employees were fully compensated.
Yes, sir.
Okay, thanks. Mr. Turner.